Well, hello and welcome everyone to this Better Business Bureau Building Trust in Trying Times webinar. I'm your host, Jamie Dillon, and it's so good to have you with us today. This is a live webinar, but if you hear something that you'd like to share with colleagues or to revisit at a later time, we do have a recording posted by the end of the day on our YouTube channel at youtube.com/BBBNWP. Today's topic, insurance coverage for COVID-19 losses from the perspective of the business policyholder. So rolling lockdowns in cities and states across the US prompted by COVID-19 have many companies checking the fine print on their business insurance policies. All businesses should be checking their policies immediately to see if a payout under their business interruption insurance is available. But there are intricacies to each policy in each state, and that's why we're here today. But before I introduce today's guest, I'd like to touch on a few housekeeping items. First, this is an interactive webcast, so as we go through the presentation and conversation, please use that Q&A box at the bottom of your Zoom window. You'll be able to see what others are asking, and if you see a question that you really like and want the answer to, click that little thumbs up icon to vote up that question. When the time comes towards the end of this webinar, we'll ask those questions that matter most to our audience first. So now on to our guest today. We're so fortunate to have Tristan Swanson, partner at Miller, Nash, Graham & Dunn LLP based in Seattle, Washington, with offices in Vancouver, Washington, Long Beach, California, and Portland, Oregon. Tristan joined Miller, Nash, Graham & Dunn as a partner in April of 2019. His practice focuses on construction, real estate, and insurance coverage disputes. He represents contractors, subcontractors, owners, landlords, and developers, and has achieved successful outcomes for clients in state and federal courts and in alternative dispute proceedings. Tristan prides himself on his ability to help clients reach successful outcomes by precisely tailoring strategies for each client's unique situation. Welcome, Tristan.
Thanks, Jamie. It's great to be here with the Better Business Bureau. I'm here to talk about what some people find sometimes a little dry, which is insurance coverage. So I'll try to keep it interesting, keep it big picture. It's obviously an important issue. Business interruption coverage is something that almost everyone has, and everyone's business has been interrupted. So they're looking there to see what relief, if any, can be had. So I'll start by talking big picture about, what does this coverage say? What are the threshold issues to getting it? We'll talk about some other coverages that almost every policyholder has inside their commercial property policy. We'll talk about what I'm seeing as far as pushback from the insurance companies, and here's a heads up, they're pushing back across the board. And then what can policyholders do now to protect themselves and preserve their claims? So jumping right in, what is business interruption coverage? Well, the classic example is, my restaurant had a fire. Because it burned down, I had no income, but I had continuing fixed costs. That's what business interruption coverage is meant to cover. My income loss because my premises were destroyed and I could not generate revenue as a result. And so that's what we've got going on as far as the basic premise of it. It's usually paired with something called extra expense coverage. Imagine if your office park burned down. Now I've got to relocate all my employees. That's an extra expense. And then it's also paired with continued business interruption coverage. So I opened back up, but no one knew I was open. It took a while for me to ramp back up. Those three coverages are paired together. They exist in almost every single policy. If you use a commercial broker to purchase a commercial property policy, in all likelihood, you have some form or version of business interruption coverage. So what does it say? How do I get into that main insuring clause? The main thing is that it says that they're going to pay for your loss of business income due to a suspension in your operations, and that must be caused by direct physical loss of or damage to covered property. That's the threshold issue. Did I experience direct physical loss of or damage to my insured premises? Insurance companies generally are going to say, no. COVID-19 to insurance companies is not direct physical loss or damage. They want to see some sort of wild structural change. They'd like to see a fire, a windstorm, some kind of flood. That's the insurance industry's version of direct physical loss or damage to property. But they're basically wrong about that. courts across the country have found that all sorts of things that aren't structural changes to property can be direct physical loss or damage. Courts have found that E. coli inside well water can be direct physical loss or damage. They've found that asbestos fibers, microscopic little asbestos fibers, can be direct physical loss or damage. In a really kind of great fact pattern out of Florida, they found that the odor of cat urine can be direct physical loss or damage. And then there's all sorts of cases saying that noxious gases, ammonia, gasoline, wildfire smoke, these can all be direct physical loss or damage. Now, every state's law is different. You know, in Washington, we're a very pro-policyholder state, and that could be different in the state in which you're sitting. But in general, this is an issue that I think is going to be resolved in policyholders' favor. So I think we start from a place where most policyholders are probably inside the insuring clause. What about this other coverage? And this coverage is called civil authority coverage, has been getting a lot of press. And this the idea behind this coverage is, well, my neighbor had a fire and now I can't open my business. The fire marshal said, you're closed until we do a full assessment. And because of that, I'm sustaining business income loss. And generally what you see for this coverage is, you know, I need direct physical loss or damage somewhere besides at my place. I need that to have been caused by a covered cause of loss, which can mean anything that's not excluded. And it has to occur within a certain radius of me. So a lot of people are looking here for good reason, because it seems like COVID-19 fits this mold pretty well. And I'll talk about that a little bit more later. Another interesting coverage out there is that, in fact, the insurance industry sold pandemic endorsements. And believe it or not, you know, these exist out there. Not a lot of policies have them, but certainly worth checking yours. These are triggered by, you know, a public authority shutting down a location due to an epidemic, which fits a lot of fact patterns for folks out there. And it actually defines covered disease as a coronavirus disease. So when I first saw this, I said, you know what, there is no way an insurance company isn't going to accept coverage when they've issued a product like this. Lo and behold, 2 weeks later, I got the denial letter. And the argument was, you know, we actually meant to cover other coronavirus diseases, not this one, if you can believe it. So I think this should make everyone feel better. No matter what you purchased, you're going to get a denial. And even these people who had the foresight to get a pandemic endorsement got denied. This is the reason why I think that it's important to take a close look at your policy and really think about, you know, whether or not, you know, the pushback is necessary, because people in these shoes certainly, I think, should be pushing back. Well, there's other potentially applicable coverage out there too. So a lot of these coverages are sold as endorsements to policies or add-ons. So if you're in the restaurant industry, for example, it's very common to have a communicable disease event coverage. There's trade disruption insurance. There's event cancellation insurance. There's travel insurance, trade name restoration insurance. They go on and on. I don't know them all, but they're out there. The main thing is that, you know, you want to consider the policy holistically. You want to look outside of that main insuring clause and civil authority coverage, because there might be add-ons to your policy that independently provide grounds for coverage. And it's important to evaluate that and make sure that your insurance company is also evaluating it. So what about insurance companies? What are they doing? They are denying claims. As of right now, I have yet to hear about a single claim relative to COVID-19 business income loss accepted. That means the pandemic endorsement folks are not being denied. People who have no virus exclusions in their policies are being denied. Everyone's being denied. And the reason for that isn't probably because your policy or your set of facts is uniquely bad, and therefore, based on those uniquely bad facts, you should just accept the denial. It's almost an existential crisis. If an insurance company pays out on one claim here, that probably means they need to pay out on 10,000 claims. And so they're looking at $1 billion loss. And right now, the insurance industry is just not willing to accept that prospect whatsoever until on some level they're forced to do so. And so you're just seeing a blanket across the board denial. These are written on templates. I've seen lots of denials where the wrong insured's name is mentioned. And that's just because the adjuster forgot to do the control, find, replace well, and just went right through it and didn't even bother double checking it. That's how bad these denials are, because again, they're just going out to everyone on a complete template basis. So what's in these denials? Well, first they're saying there was no direct physical loss or damage. And as you know, I just talked about, I think that's a loser for them. I think most courts are going to find that the virus, even if it's microscopic, it has a corporal existence and it is direct physical loss or damage. Then they're saying, well, on an evidentiary basis, can you show me that you swabbed the wall of your business and found that you had coronavirus on site? Well, the answer is of course not. People couldn't even get tests. So were we swabbing the walls of businesses? Absolutely not. And this is going to be an interesting battle because it's almost a science battle. You know, we're saying that any place of public accommodation, any time where large groups of people were working together, essentially in a pandemic situation, there's contamination or there's the imminent risk of contamination. And the more we know about the coronavirus, that it might have existed for months earlier, we can essentially assume in most instances that, say, a restaurant had someone who was sick inside it, that at some point coronavirus existed on some surface. And the question is going to be, is the court going to say that's good enough? Or are they going to try to take this insurance company line, which is that, well, I mean, I'm sorry that you couldn't, you know, test every counter of your restaurant in February for coronavirus, but unless you show that to us, you're getting nowhere. The next one they're also saying is that, well, access to your premises was not prohibited. You could do takeout orders, and therefore you weren't prohibited from access. I think that's a loser. That's not what the insurance policies say. There's no way to read some of these proclamations and say that access was not prohibited by a civil authority. And the fact that you as an insured were mitigating your losses, you know, trying to essentially benefit the insurance company or your employees by staying open, I don't think that's a winner for the insurance companies, but it's showing up in almost every single denial letter. The biggest issue that policyholders have, and I'll be frank with you, it is an issue, is that a lot of these commercial property policies have virus exclusions. And to cut to the chase, what most of these virus exclusions say is that if you've got a big chain of causation, if a virus shows up anywhere in that chain of causation that produces a loss, you're out. There's no coverage whatsoever. Now, one of the things to note, just talk about these, just remember, first off, not every single one of these policies has one. In my experience, it's probably about an 85% average, maybe a little bit less. But some major insurance companies just forgot to put these in. We've got Berkeley North America, Western National, Lloyd's of London, Society Insurance, Cincinnati, Hartford. For whatever reason, these just aren't in their policies. And for folks who don't have a virus exclusion in their policy, depending on what state they are, got a pretty good claim for coverage. And then not every virus exclusion is written the same. So for example, you'll see a lot of exclusions for mold and bacteria. Well, some insurance companies are saying, well, that's a virus exclusion, but it's not. You know, bacteria is different than a virus. And if they're trying to stand behind that, that's not going to work. Also, some of these virus exclusions don't match to every single one of these coverage parts. So you may, it may exclude coverage for losses, but it doesn't necessarily exclude coverage for all types of losses. And then finally, and this is going to go into the weeds a little bit, there's this idea that certain states have of the efficient proximate cause rule. And that's all about how in a chain of causation, even if there is some sort of excluded event, coverage is still owed. I've got a little video to try to make this presentation more interesting. It's all about chain of causation. Hopefully it loads. I think we're going to have success here. All right, hopefully that wasn't too graphic. But here's the idea, and that in a typical loss, you have a chain of causation. And one thing leads to another, leads to another, leads to another, and now you have the loss. What the efficient proximate cause rule says is that if the predominant cause, which they also call the efficient cause of the loss, is covered, it doesn't matter if there was some sort of excluded event in that chain of causation. You still have to provide coverage regardless if a virus showed up. So, in this example, in this last video, if, hearing aid malfunction was the predominant cause of loss, but everything else in there was excluded, you would still have coverage depending on how your state's efficient proximate cause rule works, because that was a covered cause of loss and that was the predominant cause of loss. So let's see that play out here in a civil authority context with COVID-19. So that, civil authority coverage says that a civil authority must have prohibited access to your premise. And that prohibition of access must arise from direct physical loss or damage to property other than at such location. So you're sitting there and you're saying, well, the virus is direct physical loss or damage. I don't have a case on my premises, but we know that the virus was all around me. Hey, my business might only be a mile from the restaurant. And then, so we feel like that's good. We're inside that first bit of insuring language. And then it says, and that must be caused by or result from a covered cause of loss. So the prohibition of access must be caused by or result from a covered cause of loss. Okay, well, my insurance policy does not say that, for example, Governor Inslee's proclamation is an excluded peril. So I've got direct physical loss or damage that did not occur at my restaurant or my premises. Within 1,000 feet of me, I'm sure there was a lot of COVID-19. But that wasn't the predominant reason I'm not open. The predominant reason I'm not open is because the governor of my state said, you cannot be open. Well, if that's the case, and your state says that if the efficient proximate cause is covered, then coverage has to be provided, you've got a very colorful argument that an insurance company's denial of civil authority coverage is wrong. So that's how that plays out. I know it's getting into the weeds a little bit, but I think it's interesting. It's important for policyholders to know this because, again, you're going to get a denial letter and it's just going to say you're denied. It's written in very technical language, notwithstanding that they probably have the name of your business wrong. So it's good to know these things as you're reading it. A lot of people have been asking about government intervention. Are we going to get to a place where, there's some sort of federal or statewide relief that will just fix all this business interruption coverage? The answer is probably not. There are a lot of states that have taken, or legislators that have taken turns at writing legislation that essentially goes back and rewrites insurance policies. None of those have made it to the governor's desk as far as I know. And then I think probably there's major constitutional problems with essentially rewriting a contract by the government afterwards. So I don't really expect that to have a lot of legs. There's talk about a nationwide act where essentially the government would fund these claims and then the insurance companies would administer it. I don't have a lot of faith in the bipartisan abilities of Congress, so I don't see this coming together. I also think in general, people aren't going to like the idea of insurance companies denying claims, then being provided money by the government to pay them, and then taking a cut off of it as profit for administering them. I don't see that happening. And then there is some talk about going forward, having something that looks like a Terrorism Risk Insurance Act, which basically is a government funded insurance program where essentially they have to offer it to everyone. And maybe that will happen, but it's going to happen prospectively, not retroactively. So what should you and your business as a policyholder be doing now? First step is make the claim. There's no drawback to making the claim on your policy. The only people who are assured to get no coverage are those who don't make a claim. And that's important for a whole bunch of reasons. Even if you don't plan on litigating your claim yourself, you'll have kind of put your flag down, and you'll be one of those people who, if something goes your way, you've already accomplished step one. The other part of it too is that if you don't make a claim after enough time, you're also probably going to run into some sort of statute of limitations or contractual limitation period. Most policies, and everyone should know this, say that you have to make your claim or sue on your insurance contract within 1 or 2 years of the direct physical loss. So again, definitely want to make sure that that happens. Document what you can. Again, if civil authority coverage is the best chance you've got, well, find out from your neighbors. Did any of you guys have an employee who had a confirmed COVID case? Did you have a customer who called you up later and said you had a confirmed COVID case? To the extent that the court says, well, we need that type of evidence for this civil authority coverage to go through, it would be good to have, and this is the best time to get it when everyone's talking about it and may still be shut down and isn't buried under all sorts of new memories and new issues. You want to document your damages. That's not a big problem for most businesses, but it's important. The truth of the matter is, the first hurdle is coverage. And then if you get into a battle about how much money you're owed, you're, as far as I'm concerned, 90% of the way there. But have your damages ready. You don't want that to turn into an issue after you fight that first initial battle and then wind up having a bunch of issues. Have your denial and policy reviewed. You are going to get a denial. And again, it's not because of you. It's not necessarily because you are uniquely different than anyone else. But not everyone has a great claim. So have that denial reviewed. For people who are in Washington, that's the type of thing that I can do very quickly nowadays. I can just take a look at a denial. I can already tell you with 90% accuracy, whether or not you've got a pretty good policy for pushing back or if you've got a tough one. And then finally, there are opportunities to band together. And, we've seen this happening in Washington. So for example, I already represent a bunch of restaurant clients that all have a very similar policy. That doesn't mean that there's no expense to litigation, but it also means that there's a lot of efficiencies. These are the same policy forms largely. The facts are largely the same. We've got similar legal research. The same complaint can be used kind of as a template for everyone else. And so there are efficiencies there. If you think that you've got a bad denial, talk to other people in your community, talk to other businesses that are situated like you, and thinking about all going together en masse, and that way seeing some real efficiencies as far as the costs of having to push back on a denial. And then last but not least, this is kind of how I see the world. I think this is important for how you might group yourself, is that there's basically 4 groups of insureds. There's the first group that has a pandemic endorsement. None of those should be taking this denial on face value. That's a very small group. Then there's the group that has no virus exclusion. And that's, again, a good place to be if you're an insured. Then you've got the group that's got add-on coverages. Their policy form might be written a little funkier than sort of the typical commercial property form. And those, it's a mixed bag. And the last group, you've just got what's called a standard commercial property insurance services office form. Those folks are going to have the hardest, job fighting these denials, and frankly, may decide that it's not worth the expense and trouble of doing that. But knowing where you fall into that, talking quickly with the lawyer to get a consult on that, is good, because again, we're all businesses that paid premiums for years and years and years. You turn to your insurance company in your time of need, and you got denied. When that happens, I think it's worth, at least doing a little investigation and make sure that that denial was fair. So that's what I've got for right now. If there's any questions, I'd be happy to answer them.
Great. Thank you so much, Tristan. I appreciate that. As I listen to your presentation today, and I realize a lot of these people will be filing claims, what can they expect, especially given that a lot of the businesses today are in dire straits? What can they expect as far as turnaround time for response or for relief?
Most states say that they've got to complete their investigation into your claim within 30 days. And that almost never happens. But in this circumstance, it sometimes does, because a lot of insurance companies aren't even bothering to investigate. They've got a template form. They find out that you're making a COVID-19 claim. They insert your name sometimes accurately into the template, and then they send you the denial. So I've seen denials in as little as 2 weeks, And I've seen denials that have taken as long as 60 days, where insurance companies are actually doing a fig leaf investigation, I think, to try to diminish the chance that someone's going to say, well, even if there was no coverage, you did something in bad faith.
All the more reason to, make sure that you're getting all of your ducks in a row as quickly as you can and not delaying, I would say.
Yeah, agreed.
So Mike asks, does your business need to be completely shut down, or how would you prove partial?
Well, I think the easiest way, if you go into the civil authority context, the easiest way is to show that the government in some way prohibited any level of access. In Washington, they allowed to-go orders in restaurants, but they did say there's no dine-in services. That is a prohibition of access. So if customers just left because they were scared, that's tough. But if there's anything where a health authority, a governmental authority, a regional edict, anything that regulated your business, that to me can be construed as having a suspension of your operations due to direct physical loss.
Okay, we have another question in here, Tristan, and it's a little bit like the first one that I asked. So when's the best time to file a claim?
Now, there's no harm in doing it. You might as well get it in there. File your claim. It doesn't, I think people are worried that if I file a claim, will my insurance company not renew me? Very unlikely in this circumstance. There's tens of thousands of claims are being filed. Nobody's saying, oh, those bad people who filed the claims, we're never going to insure them again. And they're all being denied anyways. And on top of that, I think you're going to see the changes in the insurance market are not going to be driven relative to specific businesses making claims. This is a global event. And so those types of major structural changes that you might feel are happening on a much, much higher level than you going to your broker and saying, file a claim for me.
Great, thank you. So our next question with the most upvotes here is it fair or appropriate to start the reopening process if I'm filing a claim for losses?
Yes, absolutely. In fact, you're required to. You've got to mitigate your damages. Staying closed will, voluntarily will not help your business interruption claim. Again, I think you're going to want to show that you had the insuring language says you need a necessary suspension of operations. Well, for a lot of people, we've had that necessary suspension because the government told us you have to suspend your operations. Once those facts aren't there anymore, those claims get much, much more difficult.
Great, thank you. So we have another question with upvotes. What if the business policy has exclusion on viruses and due to that received the denial letter? What are the options in this situation? Also, which group would this fit in?
So, good question. I don't know which group you'd fit in until I looked at your policy, but let's say you're in group 4, which is that you just got a standard commercial property policy that's based on an insurance services office's form. Those are tough claims to beat, especially if you're in a less, policyholder friendly state. There's a couple things to think about there. One, look at my endorsements. Do I have any add-ons to my policy that, exist outside of that virus exclusion? And then second, what does my civil authority coverage say? Because there is this chance of doing the end around. If the fish and proximate cause of my loss was a proclamation and there's not some other exclusion that removes proclamations as covered causes of loss, well, then the fact that there's a virus somewhere in there in this chain of causation may not matter. That's certainly true in Washington. It may not be true in every other state. Something to think about and, potentially have evaluated quickly.
So it sounds like I have a call coming in. Sorry about that if you can hear that ringing through. So I have one more question here. What language should I ask to be included in future policies to better the chance of getting a claim approved if or when another crisis like this one happens again?
It's a really good question. I'll look into my magic 8 ball, and this is what I tell you, is that the insurance industry as a whole is going to go back and try to write the most impossible to get around virus exclusion imaginable. And they're going to stick it into every single policy. And they still might not work. I mean, they've tried to do this with all sorts of things and creative policyholder lawyers getting around it. But that's what the future is going to look like. There's going to be no ability, I don't think, for a typical policyholder to avoid that. What you may still see happening, though, is for an add-on that you could buy some kind of limited pandemic risk endorsement, like the one I put up on the screen. I think those will be sold. I think they'll be expensive, but I think that, anytime you see something like this happens, there's going to be some insurance company that says, well, let's see if I can offer this since it's on everyone's mind. So I think you'll see those endorsements, but I think you won't see any policies without a virus exclusion.
Great, thank you. I have two more. Do you mind? I know we're right at time, but I have two more that I'll roll into one. Again, it seems to be on a timeline or timeline questions. So they're asking, if your insurance denies your claim, how soon will you need to file suit? And if you're denied in your initial claim, what is the timeline if you appeal?
So good question. Almost every single commercial property policy says that you have to file suit to preserve your right to bring a breach of contract lawsuit within 1 or 2 years of the direct physical loss or damage. I've been, for a rough, when did that happen? I've been using the date that, in Washington, where Governor Inslee shut down, whichever of my clients' industries it was. So for restaurants, March 19th, for construction, I think it was March 25th. But whenever you need to file suit within that date, or else you cannot bring, in many instances, a breach of contract action against your insurance company. And again, almost always that's 1 or 2 years from the date of the direct physical loss or damage.
And one final question from Charles. Does the order of civil authority coverage have a time limitation in it, i.e. 3 to 4 weeks, or is it open-ended?
It does. It is a time element coverage. Most often it's 4 weeks. And then it's capped out too. So it'll be 4 weeks and $500,000 or 4 weeks and $250,000. It's also got a geographical range. So some people have civil authority within, an event could have happened within 10 miles of the restaurants. For some people, it's 1,000 feet. So each one of these is a little bit different. It's very easy to figure out. Usually that information is in the declarations of your policy. But that's a very good question because it is time capped.
Great, thank you, Tristan. I think what we've learned is that all policies are a little bit different. It is always good to be able to rely on the experts if you have questions and to be able to act quickly during this pandemic. So Tristan, we've come up to our time today. Thank you so much for being able to really be in lockstep and side by side with these small businesses all across the country. For Better Business Bureau, Northwest and Pacific, we're so grateful for you. Just as a reminder, I wanted to let everyone know that this is being recorded and it will be available on youtube.com/BBBNWP later on this afternoon if you want to be able to check some of the information or pass it on to your colleagues. In addition, we also have a website that continually has updates, including links to these webcasts, links to upcoming webcasts, which we will be airing a few times a week going forward. And that website is trust-bbb.org/COVID. trust-bbb.org/COVID. Hope you join us on next Tuesday, May 26th. We have Darren Leong coming back with us, 2 p.m. Mountain Time, to talk a little bit about finances and the changes for the loan application process that have been occurring for PPP and the EIDL loans. Thanks, everyone. We appreciate it. Tristan, again, thank you so much, and we'll see you soon.